Hi there, welcome to Kneppy Invest. In this video, I'm going to focus on a company that doesn't have to release an Appendix 4C or a quarter report, but chooses to voluntarily, and that is Fiducian Financial Services. They release two Appendix 4Cs every year. So they release for full-year results, half-year results, and then quarter results on top of that. So every 3 months, we'll definitely get a financial report from Fiducian Financial Services. Now, for full disclosure purposes, I am a shareholder of this company. I am a long-term shareholder, and I'll continue to be a long-term shareholder for as long as possible because I do think there is a lot of potential moving forward for this company. So let's get stuck into it and talk about what this company actually does, even though it's sort of in the name of their company. Fiducian Financial Services, funny enough, is a financial services company, and some of the services they do provide are investment and super platforms, funds management, financial planning and wealth management, and financial planning tech solutions. This company was founded in 1996, and one of the founders is Indy Singh. Maybe he should change his last name to Ford, and he actually has a 35% holding in this company, and he's still within the company. He's actually the executive chairman. So this guy, this Indy Singh, has been in this company for 25 years, and he's definite skin in the game. And that is one of the reasons I've decided to take a position in this company. Not the only reason, but it is a big reason because this guy has significant skin in the game. So founded in 1996 and listed on the ASX in 2000. So been around for 21 years as a publicly traded company. One of the largest shareholders, apart from Indy Singh, is London City Equities. They have a 6.4% holdings. Funnily enough, London City Equities is not based in London. It's actually an Australian company. It's something I discovered as I did research for this video. And the market cap for Fiducian Financial Services is $270 million. That's at $8.60. So just based off $270 million market cap and a share price of $8.60 is telling us right now they only have about 30 million shares on issue, and that hasn't been growing because this company is cash flow positive, profitable. They don't have to do any capital raisings or much at all. And the ticker code of Fiducian, of course, is FID. Before we have a look at Fiducian's quarterly report that they released for the September quarter, let's just have a look at financial year 21 numbers and to see how they've grown from financial year 20. And this company has been growing at a nice solid rate over the past 20 years, and that has continued from last year to this year. Revenue's grown from 54.7 million to 58.7 million. Operating cash flow's grown from 11.7 million to 16 million. Profits grown from 10.5 million to 12.2 million. Funds under management, advice and administration has grown from 8 billion to 10.4 billion. They have a little bit of debt, only $19 million of debt, but when you look at some of the valuation metrics, EV to operating cash flow at 15.7, I would prefer that to be a little bit lower, but I do understand there's a lot of investors out there who are willing to pay a little bit of a premium for this type of company, and the PE ratio at 22.1. I am excited about the future potential for Fiducian, and that's one of the reasons why I have this in my long-term buy and hold and hope to keep it in that portfolio for as long as possible. Whenever a company has numerous verticals or segments, I always want to see how those different verticals are performing. Unfortunately, most companies do provide the information in the annual report or full-year results, and Fiducian have given us this information in their annual report, breaking down how funds management, financial planning, platform administration, and corporate services verticals have performed over the past year, breaking it down into revenue and profit. And the first thing that struck me was that financial planning had very low margins and has gone backwards in the past year. Looking at revenue, financial planning revenue has fallen from 20.8 million to 19.5 million, and that vertical was actually unprofitable in 2021, loss-making by 360,000. The other two things that really were noticeable in this was how well funds management and platform administration have been performing, and the significant margins in both of those platform, of both of those verticals. For instance, fund management revenue has increased from 15 million to 17.9 million, and the profit for 2021 was 11.5 million. So really high margins in that vertical. But the margins of that vertical just don't compare to platform administration. So even though that is growing revenue from 11.1 million to 12.6 million, just look at the profit that vertical has produced in 2021, 10.6 million. So what that is telling me is that Fiducian management should be paying more attention to growing funds management and platform administration over financial planning. One thing you'll notice in a lot of Fiducian's presentations is one slide where they show you the performance of 4 of their funds compared to the rest of fund managers in the Australian market. They call them against the world's best fund managers in the Australian market. And this information is sourced from Morningstar. And what they are showing you here is how 4 of their funds, Capital Stable, Balanced, Growth, and Ultra Growth, have performed over 5 different time periods. And those time periods are 1 year, 3 year, 5 year, 7 year, and 10 year. And what I look for in regards to fund managers' performance is not the short term, but the long term. So I'm looking at 5 year, 7 year, and 10 year returns. And the reason I do that is because in one random year, any sort of fund can outperform the market and then underperform the market over the next 9 years. So sometimes you will see one particular fund manager like Fiducian's Balanced here only being ranked 38th in the 1 year, but then ranked significantly higher when you look at the 5, 7, and 10 year time frames. But all 4 of Fiducian funds have performed significantly well over the past 5 to 10 years. In particular, the Ultra Growth Fund, which ranks first, second, first, and first over all 5 timeframes. And over the past year, it's actually returned 38.5%, which ranks at number 1. And over the past 10 years, it's returned 12.2% per year, which again ranks at number 1. So well done to Fiducian's funds that performed considerably well over the past 10 years. In fact, all 4 of Fiducian funds are ranked in the top 10 in performance over the last 10 years, 7 years, 5 years. Before we have a look at Fiducian's September quarter report, I just want to go and have a look at the statement of cash flows from their full-year results. If you know anything of me by now, you'll know the first thing I'll always look at when a company releases the full-year or half-year results is a statement of cash flows, and then I work my way back. In my opinion, it's just my opinion, the statement of cash flows is the more important or most important financial statement a company does release. Now, the other statements are not unimportant, but they're just not as important as a statement of cash flows, because I want to see if a company can produce positive cash flow in their operations, and Fiducian definitely does that in their operations. In fact, they had net cash inflow from operating activities of $16 million. Didn't spend a lot of money in investing activities, just a net cash outflow of $1.5 million because of business development loans granted to advisors. They did spend $7.5 million of dividends, which means a net cash outflow from financing activities of $9.2 million. But overall, because their net cash inflow from operating activities was $16 million, cash on hand grew during the financial year 21 from $14 million to $19.3 million. Now let's have a look at Fiducian's September quarter report. Receipts to customers, $17.3 million. Now this was the first quarter of the financial year, so we don't see how they have performed through the rest of the financial year. That's why the year-to-date numbers are exactly the same as current quarter, and they were operational cash flow positive for the quarter by $3.4 million. Now, they did pay a $4.6 million dividend during this quarter, which meant the cash on hand actually did fall from $19.3 million to $17.5 million. Now, something else they mentioned in this quarter report right at the start is this little statement. The lodgement of the Appendix 4C at the end of the first and third quarters of a financial year is a voluntary act undertaken by the company and is not required by the ASX. This is the only company I know on the ASX that actually does voluntary reporting of an Appendix 4C. And I think that's another reason I like holding this company. If you Google, when did Fiducian list on the ASX, you get a return or results 2015. And that's not exactly true, because there was a company called Fiducian, I think it was Portfolio Services, and they went through a restructure in 2015, changed the name, and that's why you might get results of 2015. But this company has been on the ASX in one form or the other since 2000, and that restructure simply worked because when you look at the receipts and operating cash flow of the company, it has grown significantly since that restructure. And this is the history of the receipts and operating cash flow of this company since 2000. So even though it was growing from about 2000 all the way up to about 2008 during the GFC, we saw a period of time where there was no growth in this business. So whatever they did in this restructuring absolutely worked, because we've seen continual growth in the receipts and operating cash flow of this business since then. And this is the chart for Fiducians ever since they restructured. Unfortunately, you can't see or find a chart. Well, I couldn't find a chart of when Fiducian, before they restructured. Share price way back in 2015, around that restructuring period, was $1.80, and now it's $8.30. So the share price has more than quadrupled over the last 6 or so years, and definitely some very positive sentiment behind this company right now. Share price has moved up. It's gone from the bottom left to top right. That's exactly what you want to see for any company you do hold in your portfolio. So quite bullish about this company moving forward, and fair bit of positive sentiment driving the share price higher and higher. That's all I have for this September quarterly report for Fiducian. Remember, this company doesn't have to provide these core reports. They only do it voluntarily. If you have any questions about this company or any other company on the ASX, or maybe even internationally, leave some sort of question, comment, your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you find someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.